welcome to the bottom line. In today's video, I'm going to cover two broad aspects. One, uh, where is Nifty at this point, and second, an investment idea in a very strong fundamental chemical company. Uh, Nifty has been running higher. Soon again, I do believe it will hit all-time high one more time in the past 3 months. And the last time we spoke, the valuations were close to around 21.9 somewhere in December, and we've sharply moved to 23.34 in terms of valuations. What that suggests is that the price is moving way too fast as compared to the earnings, as compared to the underlying earnings of the Nifty 50 companies. There are two things that I generally do when I see such sharp movements. One is I am very cautious in terms of holding on to profits. Generally, the companies that have overheated, in my opinion, overheating could be, for some people, it could be 2 times the industry P, 3 times the industry P, and I have a certain value for myself where I start booking out profits. I do not keep anything on the table to be taken out again, especially when Nifty is moving away from its mean Ps. If you look at the charts of Ps, you know the standard deviation has been at 25.72. It is inching close to that now. The last time it was at that kind of valuation was in July 2023, and after that we saw a decline, and then we're seeing a sharp move back up, which is not worrying. It's always good to have your portfolios in green, but there is a certain level of caution that I incorporate whenever I see such kind of moves. Again, nothing wrong with the market. The only part is I don't see macroeconomic fundamentals to align very well with what is happening in this bull run. Right, we are nowhere close to an interest rate reduction scenario. The inflations are high. This season is going to put more pressure on food inflation. Summers are coming up, so it can be a little taxing for the inflation to stay low from here. So if it could have been on a verge of interest rate reduction, I would have understood that this move is, it's making sense. But at this point it is not making sense to me, but that it doesn't matter. I mean, I am here to make profits, so is everyone else, and I make sure that I don't leave a lot on the table when the times are not right. Again, the stocks that are not overrated, overvalued in terms of the valuations, and they are still fundamentally sound, I generally don't touch them, because even if Nifty goes anywhere, those stocks are still undervalued in my opinion. So even if the Nifty falls, those stocks will fall, but for the better, is my opinion. So that's where we are at in Nifty. Very watchful at this point. The next 2 or 3 months, ideally it would be nice if Nifty can retrace a little bit and then again move higher, or it pauses a little bit, consolidates for a couple of months and then moves higher. That would give me a little more confidence in this move to be a sustained move. But let's see. I cannot call the index any higher or any lower from where it is today. The investment idea, the chemical company that has come to my charts, is Archean Chemicals. It's basically a bromine, industrial salt and sulfate of potash creating company. It's the largest exporter in India for bromine. Relatively small market cap. The stock P is at 19, the industry is at 35. That puts it in a much in a much attractive zone in terms of valuations. It's a new company. It has been in the IPO of November 2022, and the price has been ranging from there. In terms of peer comparison, if you see, no other company except Tata Chemicals is even close to what Archean Chemical valuations are at this point. Tata Chemicals, I have not selected for two reasons. One, the debt to equity, and if we look at the 5-year OPMs of Tata is about 19, and the 5-year OPMs of Archean are close to 35. That's the massive difference between the two. So I would always bet on a company that is making great operating profit margin as compared to the low one. If you look at the profit and loss, great sales figures, rising sales figures, great OPMs, as I said. In terms of balance sheets, the borrowings have reduced from 968 crores to almost 64 crores and only comprising of lease liabilities and short-term borrowings, which is not very worrying. Those could be taken care by the 58 crores worth of cash and any fixed assets that they have built, which is close to about 1000 crores. In terms of the cash flow, not a single year we have had negative cash flows. Every single year we have had positive free cash flows, except this 1 year, but it's not much. 46 crore was other investment ideas, and fixed asset purchase were 52. So they have aggressively built capacities when the markets fell severely in March 2022, which is a smart thing to do when you have the capital. That's about it. That makes my case for why Archean Chemical looks like a promising company to me. Again, I would urge you to please do your own analysis. Whenever I post something, I post it as my learning. I post it as what I see through my lens and my views. It could mean differently for you. It could mean this company is probably weak in your terms. You're looking for probably a 50% operating margin company, and this could not be a fit for you. So ensure that you look for criteria that you deem fit for your own investments. I hope this was insightful. With that, until next time, I wish you good luck and good investing. Bye bye.